Axel Lomholt, Head of ETF Products for Europe and Asia Pacific of iShares. Welcome to the programme.
Thank you.
Your new emerging markets fund has risen over €1 billion recently. Could you briefly explain the mechanics behind this fund and the main driver for its recent success?
Okay, so one thing that's critical to understand with an ETF is the market making mechanics, and the best way to understand it is comparing an ETF with a traditional mutual fund.
Mm.
So if you're looking at a traditional mutual fund, you really only have two participants. You have the investors, so you and I, and you have the fund manager. If I want to buy the fund, then the cash flow is passed on to you and to the fund manager. The fund manager goes out and buys stocks in the underlying market. For an ETF, it's slightly different in the sense that we have a market maker. We have someone who needs to provide liquidity and make a market in the particular ETF. So to that end, you have three participants. You have the investor, so you have the fund manager, so Barclays Global Investors, and you have the market maker. And that is the key difference between the traditional mutual fund and ETF. And why is that important? Well, it's important because not only do we have to design and deliver a product which is useful for the investor, but we also need to develop a product which is useful for the market maker. So when designing the MSCI Emerging Markets iShares, we had to take into consideration issues such as liquidity, how broad the index was it easy for the market maker to hit that index, because he will be sitting on that fund in his inventory. One of the key drivers of its success has been that we have tried to maintain local access to the underlying securities. So instead of buying derivatives or P notes or any other sort of equivalent like an ADR, for each individual country within the MSCI Emerging Market Index, we've been trying to get access to the local securities, and that has been one of the absolute key success of the product.
This emerging markets fund, obviously, it highlights a very topical subject matter at the moment. What are your criteria for an emerging market, and how flexible is this index to change?
Well, the index selection is one of the absolutely key criteria we need to look at when we launch a new fund. There are many indices out there. Some of them are very broad-based, some of them are very narrow. Liquidity can be skewed in some of the indices, so we need to do a lot of analysis before we actually decide which index. The MSCI Emerging Markets Index that we use for this particular fund is a very broad index, with very good underlying liquidity in the various countries. So we have currently 23 countries in the index. The key advantage of that is that it gives the investor broad diversification across these countries, and that allows him to reduce his risk in the sense that you're diversified across 23 countries.
These 23 countries, obviously there might be a focus on China. I mean, how heavily is the focus on China? Or do you try and keep it evenly spread between the 23 countries?
Well, we obviously follow what the index methodology, right? So we try to keep the fund in line with the index as much as we can. China is obviously one of the bigger countries. I think it's recently weighted around 15%. South Korea, Brazil are around the same weights. And then you have a tail of countries from 10% and downwards. But on a comparative basis, that's actually a very diversified index.
What type of investors are the major contributors to this fund?
That's a very good question. It depends on what region you're looking at. We have a emerging markets fund in Europe, and we have an emerging markets fund in the US. And the type of investors that buy these two different funds are somewhat different. In the US, the typical investor into the MSCI Emerging Markets Fund in the US are retail investors. In Europe, the key investor base are institutional investors. So most of the people that investors we reach out to for this fund will be in the medium-sized institutional space so far, but obviously as the ETF space grows in popularity, we're starting to see more and more investors from other parts of the investor space buying the fund.
Okay. And how do you about going educating these potential investors, highlighting we have this fund here, how do you invest in it, for example?
Well, I mean, that's what we spend a lot of our time on, filling really a consultant role, being educators of ETFs, how ETFs work in practice, and particularly how some of these more complex iShares, they work. We spend a lot of time sitting down with the investor, going through the fund mechanics as we just talked about a couple of minutes ago, and giving some idea of the risk return profile over a period of years, or how that might fit into a portfolio.
I mean, obviously iShares have had great success recently. I mean, you've had a number of funds over €1 billion under management, and how do you hope to maintain this competitive advantage?
Well, I think, again, that's a very good question. We're coming towards the end of what I call the first generation of ETFs. So all the quote-unquote easy ETFs have been done, in the sense that all the mainstream benchmark have now been written ETF on them. So we're now moving into a different territory where we start to see more complex ETFs being published. But the way that we work in iShares is that we have an enormous marketing program and support program and supporting all the iShares, and that extends from as I mentioned before, going out and speaking with the end investors, huge marketing programs, education seminars, conferences, and we believe competition is good for the overall ETF market. If we look at the ETF market as a whole, it's still only a couple % of the entire European mutual fund market. So whilst there's a lot of media attention and it's a hot topic at the moment, in the great perspective, it's still only a small proportion of European mutual fund assets are allocated to ETFs. So we certainly believe that there is still a huge upside in the ETF market, and we have only really seen the beginning so far.
Okay. Well, thank you very much for your time today.
Thank you very much.
Thank you.